Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it a few minutes past 1100 UTC. A really big shout out to everybody joining the stream live today. A special mention to all of you, all the way through this year and heavily into last as well, with thousands and thousands of you on the live show and even more of you watching this on recording, reaching out with your success stories, your failures, your questions, and just generally really proud and pleased to have you all with us, right? Seem to have a really good group on here. So a big welcome to you all and a very happy Monday, the 28th of July, almost through to the end of July already. The year is absolutely flying past. And the turbulent market conditions have made it even more so, as we just seem to be just ripping through the year. And what is the whole point of today's show? Well, we're going to take a look at Bitcoin. Mostly our focus on Monday is looking at that, trying to look over what we've got for the week ahead. And always to lay out what I would call our conditions, right? So there's an old saying in trading. It's a little bit cliche, but it's incredibly true, which is you want to plan your trade and then trade your plan. So every week we come on, we lay out our stall, we identify key areas like we did here with Bitcoin that we want to be looking to get involved long or short, or maybe we're sidelined. And then we want to take a little look at what's going on towards alts as well, right? So today we are going to take a look at Bitcoin. We're going to take a look at the news coming up for the week. We're going to take a look at Ethereum. We're going to take a little look at Solana as well. And I think we also would be a little bit remiss if we weren't looking at Bitcoin domination, right? As we said, a lot of the concentration at the moment is looking towards the capital flowing out of Bitcoin and flowing into alts. We've seen ETH lead the charge. We've seen some nice alts popping off. But, you know, it's always difficult with everybody comparing this to previous alt seasons when we've got so many different catalysts to consider this time around, right? Not just to mention the mass adoption of Bitcoin, the ETFs, Ethereum in the same kind of vein as well, the oversaturation of the altcoin industry. So we're just going to take a look and see, are we really in the right conditions at the moment? We want to look at the risk conditions across traditional markets as well, all right? So who we go with is Buddy, hello, mate, BTC down, ETH up, that's what we're looking for. And it depends what side of it you're looking at it from, right? So for the Bitcoin maxis, I don't think they mind Bitcoin chilling out for a little bit, while some of the others have their chance to run. Obviously, for some of us that have been through multiple bull runs, this has been very different. You know, this cycle, so it's very narrative driven, very fundamentally and news driven as well. So you have to be a little bit more selective. In fact, a really big shout out I mentioned to one of our fundamental analysts over at the Bird Nest, actually KZM, who you can find on Twitter as well, has made some absolutely exceptional calls. But, you know, where the previous cycles you used to be able to pick kind of a rough area, industry, narrative, if you like, it wasn't even really that driven. You know, if you had a decent community, an active community, there was so much capital flowing into this space. It was a lot easier to pick these kind of gems, where at the moment you have to be a lot more selective. And, you know, KZM has done an incredible job of that. So where are we standing at the moment? Who have we got with this? Grandmaster Pikachu as well, deep. I'll try for you at the end, mate. Let me just pop this one down. If not, we'll cover it on the Alt Request show on Wednesday for you. Lucerino. Hello, mate, and very much welcome to the show. Apologies for almost certainly just murdering your beautiful name there. So what are we starting with? Let's just start and get our grounding on Bitcoin, all right, and where we are. So let me just zoom out a little bit from here. And let's just take stock of where we are, what's going on, and how we've been kind of following this through. Most of you on here, right, are much more versed to how I'm kind of looking at these charts. But please do let me know. If you don't, you can pop yourself in the comments and bits and pieces like that, and I'll go through it. But if not, then I want to just kind of probably look to get this done in about 45 minutes today. So just really want to kind of focus on the key areas. But basically, we're looking at key areas of resistance in forms of highs and lows, areas where we can see absorption, price trying to push into a level, but all of these wicks showing us that, the buyers are losing control of this and the sellers are taking control of it. Ultimately, that's what we're looking at. Who's winning the auction? Is it the buyers? Is it the sellers? So as we are at the moment, the other areas that will be key are areas of consolidation like this that become areas of demand or areas of supply above, also known as order blocks. And gaps. All right. So I will cover these briefly as we go through them. Now, the plan has been really, really simple as we've been building up to here. We've been waiting for this close above the prior all-time high, which is set at 109,998.9 here on OKX. We saw the rejection here, and initially here as well, but a nice strong body candle coming up into it. Again, price starting to stick to this level, which is normally a good sign that you're going to get some push through. And then we got the large close. So as soon as we set this, we're looking for upside, but we're not just looking to fly into the markets because otherwise we're buyers too high up. Price might not get accepted as value above there, and it might look to retest the areas, all right, to confirm these as support. Now, we've got the weekly gap here, which was the area that we were targeting for long. So ultimately, our upside target remains the same as it has for the last 2 weeks, which is the prior or the current all-time high, which is 123,293.3 here on OKX, which is this high. Remember, it might be slightly different depending on the exchange that you are on. Lucerino, awesome, thank you, mate. Horace, hey, went 100K. That'd make a good t-shirt, Horace. You should think about getting some Bitcoin merch out there, right? Hey, went 100K. I like that. And then on the back for the balls, you could have hey, went 200K, right? Burnside, hello, mate. Good to have you with us as well. The Micro Psycho, great stuff. Some brilliant interchange with Micro Psycho last few weeks. Some really, really interesting levels and bits and pieces that we've been looking at on the flush. So where do we stand? Ultimately, when I'm looking at a chart, I'm trying not to overcomplicate things. You're not going to get everything through price action, right? So it's very, very important that you broaden your horizons and you're looking into, macroeconomics. You're looking into whether we're in a considerably risk on or risk off environment at the moment. You're looking at the fundamental and news drivers as well. And if that's something you don't really understand, just make sure you're aligning yourself with very good people who do. Obviously, we have the expertise in-house at the Bird Nest, but there's also some other amazing resources you can get in there for free. People like Macro Elf, people like London Crypto Club. There's honestly, there are so many that have very interesting and controversial views, some conflicting, but there's so many that are just fear and doom mongers in the macro space. So be very careful. Another person who I respect immensely is Capital Flows. All right, I don't have any association with these people, but just telling you people that I really look to respect. I never just take the information at face value. I always run it through with my own knowledge, build my own picture, bring the information together, and then make sure you're formulating your own plan. Why is that so important? Because you'll take ownership of it. When you fail, you can learn from it. It's a lot easier to dismiss it by saying, well, I only did this because so-and-so said this, or I only did this because that. And what you're doing is you're completely and utterly separating yourself from ownership of that task. And very, very rarely does that promote a growth environment, which is so important in trading, because it's an ever-changing landscape and environment that we need to be very adaptable to survive within. So got a few questions coming, and we'll definitely take a look at those in a second, guys, as well. The other guy I want to introduce you to as well is David Bell of Think Money, probably one of the best minds in the space, very outspoken, very bright, great macro economist, and just really, really understands it. Used to run some major cash desks as well for funds. These people have proven track records. Why am I saying this? And, it is because it's just so very, very important. I find that the people that really trade these markets well and ultimately trade these markets well in the current difficult or trickier conditions are people that have a decent understanding of the general economy, of capital flow, right, of what the bond markets are doing and what inflation is doing. And you don't need to really, really, really kind of deep dive this. Wrecked Capital, yeah, really, really good one as well. Lucerino, it's A very, very good guy. Aussie, actually, I've known Rec for quite a long time. But again, you're exactly right. Just find these good people, but people that align with strategies, time frames, areas that you can trade, but also people that have a good understanding and knowledge of the macro scene as well as news drivers, okay? Because that really helps us shape these plans. Ultimately, the price action is the tool that we use to enter and exit the market as well as manage our risk, all right? So with that in mind, let's get ourselves back to the chart for a minute, actually just catch up on a few of these questions because loads of them coming in, which is awesome. One here from Craig. Would you pick last week for your mother bar approach or the week before? Oh, okay. That's a really, really interesting one here as well. So if I was looking at the mother bar on this chart here, right, looking at the weekly candles, then the last mother bar that was really, really key for me was this one, right? I'm just going to draw. So for anybody that doesn't know what the inside bar pattern is, I'm going to do this in an obnoxiously bright color just so it stands out, right? It's the first candle. Yeah. The second candle has to close with its high and low within the range or the high and low of the previous candle. What does this do? It gives us a range. Yeah. And what do we do? How do we trade ranges? Quite simply, we have a high, we have a low. If we deviate, come back in the range, we target the other side of the range. If we close outside of the range, then we look for strength to trade continuation to the upside. We see this pattern here actually worked really well because it allowed us here, when price did what? Came back and closed within the range. We then traded this to the high of the range. Now, why we didn't get there, we did get some really, really nice long positions off of this, right? Then when price breaks back down, what do we see? Well, quite simply, with any range, what we want to do is take a midline, right? So if we look at the black line across here, bearing in mind the range is confirmed here, price came back in, closed above here. What do? We enter the market targeting longs, but we're always very conscious of the midline. So while some of the longs worked out, price came back down, closed below the midline, sign of weakness. Price then moves back to the low of the range, right? So it enables us to just plan out where the key liquidity is based on what the chart is telling us. Then we had this move down here right now. You'll hear me use terminology such as strong close. Why is that important? Well, a strong close for me means that we've got a large committed candle body. And what does that mean? Well, this is a large committed candle body. Yeah, this is the high. This is a huge candle. So large body candle with minimal upside wick. Why don't I want to see a lot of upside wick? Well, it's showing me that sellers are starting to take control again if we've got that wick to the upside because price is being pushed back. So the difference between this breakout candle here, which again, as we've said, we look for price to retrace to key levels, either the prior all-time highs or to a key area, in which case we have this bullish gap here. Yeah. If price does this, yeah, this isn't what I would consider the strongest close, right? Because price came up, drove back down, but then look how buyers pushed price almost back within the range. The key area here that allowed us to retain bullish was the fact we had market structure, the fact that we were reacting at this bullish weekly gap here, and the fact that we moved down below this swing point, yeah, this prior low, and then closed within it, shows us that buyers ultimately, the liquidity was purged out there. People that were late to short this were punished. And then, like we said, we don't short in these areas where buyers are expected to be prominent. The close above here let us understand that price was most likely moving higher. Even if we didn't trade that off the lows, we've now closed back within this range, yeah, and above the midline. What do we then look for? Price to draw down, retest these areas, and give us our long setups, all right? So really good point there from Craig in terms of the inside bar. You can look at that on the weekly, you can look at it on the daily, even the shorter time frames if you really want to. Personally, it's something I typically reserve for the higher time frames, very much a traditional market trading pattern. All right. Jojo, how you doing, my friend? Yeah, this is another good point as well. So crypto policy releasing on July the 30th. We want to have an eye on that. That's going to be coming out on Wednesday. Wednesday could be a particularly turbulent day. We are going to take a little look at the news in a moment as well. So as we sit here at the moment, the weekly, in my opinion, is looking fine. I don't want to overcomplicate things. I'm a pretty simple creature at heart, right? So, you know, if I'm looking for this area to hold, I'm bullish above it. Yeah, I wouldn't even be bearish if we close back in it. If we close back within here, looking at this as a large range, yeah. Again, look at it, maybe something like this. Yeah, if we were to have this just as a range. So what does that mean? Well, quite simply, if this is the breakout of this area, Yeah, so 1, 2, 3 good touch points. Price came back down midline around here. It all makes sense. Price breaks out here. We want to see this hold. Price steps back into our range. What do we typically do? Target the far side of the range via the midline. Yeah, so if we just put a midline on this, for example, see how we've got a nice offer of support all the way through here. Ultimately, price breaks above this here, retests it and pushes up. So I wouldn't be getting bearish here. I'd be looking at these levels to be run, but I'd want to see us hold the upper 50% of this. While we stay outside of it, happy days. Again, look at the lows. What happened? We purge out the lows. Do we just start getting short? No, we step back in the range. We look for price to ultimately push higher. So being a simple creature, we're outside of the range. We're holding that. We wouldn't confirm this as a deviation unless we step back inside. So as long as we hold these levels, I continue to be bullish. Now, we've set another point of interest within that time, which is this weekly gap. This is an area that allows price to draw down buyers to get back involved before it's pushed higher. This, again, is an area that we look for long setups. Served us really, really well the prior week. Now we're kind of stepping into it this week here. We got a nice bullish candle here, longer downside wick. So this would be kind of a bullish pin bar or a hammer candle, a little bit of a short nose on it here as well, right? But we can see price drew down here, absorption as the buyers stepped in, sellers trying to take control of the market here and push it down, buyers taking back over. Now the next liquidity target is the all-time high resting up there. If we park the caveats of what's going on in traditional markets, which we're going to look at as well, we're going to look at the DXY, we're going to look at the volatility index, the VIX, we're going to look at what's going on in equity markets as well, with a focus on the indexes, because they're so, the NASDAQ, S&P 500, very much laden with technology stocks, which being risk assets normally aligns quite well with crypto. But let's imagine that we're in a world we don't get any black swan events. I'm simply asking myself here, what's the reasoning for price to be breaking down? If we're bullish, I'm just looking to retain that bullish bias, but I want to find key areas to get involved. So we're now going to look at that. We're going to add a little bit of extra granularity, and we're going to look at it here on the daily. Gibril Master, hello, mate. Good to see you. Now, the reason I got this on here, it doesn't really mean anything. It's a visual representation of where I see the key resistance or support, all right, within that. And yeah, agree with that as well, JG. Fair bit of liquidity down at Friday's gap. So as we look at this on here, right, and we're going to look at that in a minute on a slightly lower time frame, we can see the price is kind of, again, we're just ranging in here, yeah? Price came up, we had this beautiful expansion. If we took this, for example, and we look at the consolidation and we take our volume profile here, this signals price in this range. This is the value area high, the value area low. Look what price is doing. Back again, I know, to talking about range trades. Let me just do this quickly. Yeah, so we've got a bit of clarity. Yeah, if we're looking at this in range trades, look at this beautiful balance profile here, how it just comes down like a pure V. Look at this, yeah? If you're looking at distribution, well, no point really going into that really, but basically it's like a Gaussian distribution, means that it's point in the middle, equidistant on each side as it roars in. You're normally getting a ranging environment here. And look what's happened. Price running the highs, coming back to the, running the high, closing back within, taking the low, stepping back in the range, running the high, high to low, high to low. It's just ping-ponging in this area. So what we want to see is, like we saw here, see how price closed out of this area here. Great. What I'm looking to do then is say, okay, well, if the key liquidity is here, just for example, look at those wicks, then ideally what I want to see is price confirming a breakout by a strong close above, and then for me, the dips are for buying. Whilst we're in here, if we're rejecting at these levels, chances are we're going to see mean reversion, all right? We've got the point of control here. That's where the most trading volume has taken place. Remember that volume, not time. We would use TPO for time. But that's just a basic explanation of what I'm looking for. If we're then looking to kind of extrapolate that data further and we put our levels back on, then here I can see key rejection from this wick. And then all I've done is I basically just used this level to encapsulate where the wicks are in here. So large rejection, 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 and we're starting to see that rejection in here again. So the safest place for me here on Bitcoin is not to just be longing into an area that we can see has been confirmed rejection, yeah? What we want to see is acceptance above this level. And as outlined in the Bitcoin report, which is posted every day by our trading team for members, this is as well, guys and girls. And by the way, if you hear me say guys, I do mean it all inclusive. Bit old school, I know, but I am what I am. this is a professional trading team that have been doing this for years and years. All of our statistics, you can look at every single call that's made. It's all made ahead of time. You can track the statistics for free via our website as well. So I'm not talking about this from a position of somebody, no offense, there's a lot are in this industry that are just punting on altcoins or whatever. I've worked at major funds. The team that we've got around us have an incredible amount of experience and all have that backed up, as all traders should that promote themselves in this way, by their calls and statistics, which don't lie. Okay, so why am I mentioning that? Well, because one of the things that you don't want to see, or you certainly don't want to be advised at this point, is to be longing into resistance. Right now, we had a situation with this down here. All right, people getting very, very, very horny for this when price came back, closed above prior all-time high, boom, we're off to the races, came back below, still disbelief. Ultimately, when price rejects at a level, remember price is about value and about getting accepted as fair value. That's how auction market theory works. The whole point is, think of price as constantly in an auction. People are bidding the auction up. You hear the auctioneer constantly offering higher prices that are just getting gobbled up and gobbled up and gobbled up. If you don't have that, think of an auction that starts where something is overpriced and the auctioneer is, okay, give me 100,000. Do I hear 100,000? Silence. Do I hear 99? 98, 97, 96, 95, 94, 94. Okay, bidders are in at 94. Do I hear 94 and a half, 94 and a half, 95, 95, 95 and a half? As you see this thing get auctioned up, it's about price finding fair value. And that's what leads our market structures to this. Points of expansion, yeah? So you start with consolidation. That's where price has found its value. So it's kind of ping-ponging around in this area. People saying, maybe it's a bit too expensive up here, very cheap down here. Okay, starting to get used to the idea of this. The buyers are starting to overwhelm the sellers here. Price is unable to push down. Then you see these large breakouts. Small consolidation, price still very much considered value here, large breakout. Now we're just in a larger consolidation phase here, and we face this next level of breakout. So what is the market asking of us here? It's asking the question, do enough people consider Bitcoin value at this price? If they do, what will happen is people use this as an accumulation zone. Then what happens is basically it's a matter of supply and demand, right? There's only so much supply at this price, yeah, before demand outweighs it. We get a breakout, and ultimately this is what we want to see, right? We want to see this trending environment where price is pushing up. Now, in terms of the key moves that I'm looking for, I want to see price established above this level. What I would love to see is this, right? We get a strong close. Again, remember, that just means for me, I don't mind seeing a super long wick to the downside. More than happy with that. Dream scenario would even be to come and take this low out here and retest this gap, as long as we close back above here, right? But minimal downside, but minimal upside wick. Yeah, don't mind a little bit in there, because it's showing us, okay, there's a little bit of pushback. I don't want to see this giant upside wick like this or like these, because it's showing me that sellers are taking control of the auction. So if we do get this and we get the close above, then either something like this, I look for price to retest this area. Any minor pullback here is allowing buyers to get involved and is designed to normally hurt shorter time frame traders that are maybe over leveraged, and also traders that have just got into the move too late. Okay. Dream scenario, we get that. Any pullbacks then off a longing. I think there's probably more likely we get something like this, yeah, or retest this. So, we've got the prior all-time high just above us, yeah, or the current all-time high, sorry. This below, I feel like we could just get this large expansion candle that takes out this high, and then ultimately there's going to be a lot of liquidity resting up here. Very tempting place to short, a great place for people to start taking profit as well. So very natural that we see this pullback here, or maybe we get something a little bit more like this, where price runs really hot, but then retest the prior all-time high. They're the key areas that I would then look to be getting actively involved in Bitcoin again. Okay, in terms of adding to holdings, or for me, more so, I probably won't be adding much in truth to my personal holdings here. I like to buy on much larger dips and corrections. We've covered it all the way through here, or breakouts that happen at lower levels like this, right? Where we've just got key areas that we can mitigate, we can cover ourselves, all right? Up here, you're buying into price exploration, which is absolutely fine. But ultimately, swing trades come back on the menu for me once we close and hold above this level here, or this level here. Just looking at this on the 4-hour chart, and again, I'm not actively looking to take positions on this here. I did say, however, that the trade that would be more appealing to me, we need to remember it's a counter trend trade, which is dangerous, is the running of these highs and rejection back at this level, and then looking for an area that price can come back in to retest using our Fibonacci's. All right. So we can draw down here. We can see this is a key level. We've got this consolidation here that drove price higher. Want to see that act as support here, or for price to have a deeper correction down into the golden pocket, or certainly below the 0.5. The other thing I'm just going to pop on here is this. This is of interest for me, right? Because these up close candles here before this really large purge on liquidity lower, yeah, that's considered a breaker, all right? So the up move before a purge on liquidity, price is now broken out above this. So looking for this area to hold. What does this align with? Our 382 on the Fibonacci, the consolidation we just talked about, but also we had this inversion gap here, right? Why is that important? Well, this gap here was bearish. It's the gap between this candle and this candle's wicks here, yeah, showing an inefficiency. That's where the market's selling off aggressively. Order pairing is light, so you get these gaps as price drops, in this case aggressively. Then look for these areas to be rebalanced and for sellers to step in and push the price lower. If they can't do that when price closes above, as it did here, this then becomes an inversion gap, which you'll see as purple on my charts. And I'm ultimately looking for this to provide support, which it did up here, okay? So all of a sudden, I've got a set of conditions here that I can follow that says, all right, well, as long as we hold this area here, yeah, we could look for intraday longs from there. Like I said, need to be careful with slamming straight into resistance. I would like to see a slightly deeper correction. But it also means that if we lose this area, we start closing below the breaker here, it's a little bit of a sign of weakness. So I'd then be looking for this area here to hold. If we start breaking market structure to the downside back within this area, then I would consider short-term plays into this low, that being the next key liquidity target. We could also, as well, remember, dive a lot deeper into this weekly and daily gap. We see the daily gap as the grey box overlaying the large green one, meaning that price could make its way down a little bit closer to the prior all-time high down here around 112 for a retest before price moves up. JG, the problem is the value buyers like funds and Sailor are buying OTC, and the only people buying on exchanges are market makers. Yeah, market makers retail. There's definitely a different dynamic. It's a good point, all right? Well, I figured in a few different reasons today, Craig, right? First of all, I would like to say huge congratulations to the England women's football team for their superb victory last night over Spain. You know, you hear so many things going on about, oh, men's football versus women's football, etc., blah, blah, blah. It doesn't matter. Take it at face value for what it is. That's an incredible achievement by those ladies, and what a wonderful match played by Spain as well. So feeling, you know, a little bit patriotic today, not that the colours match on the chart, you know, but maybe kind of exploring my LGBTQ vibes today, Craig, right? Just adding a bit more colour, but I think you know too well, these will be gone off of my chart when they're there. I do like seeing a nice clean chart wherever possible. All right, so really key for me, happy to have this corrective move here, because what does it allow me to do? If this is resistance, yeah, what I don't want to be doing is kind of longing it here and saying, okay, well, if this is resistance here, and I'm longing into this, well, here's my upside, here's my downside. I just not really got much risk to reward. 1 for 1, it's just not great, is it, right? However, if I start to come back down into these areas here, price starts to hold and we see a little recovery, well, you know, just indicative, obviously, but if we were to correct, say, maybe a little bit lower into here, then we can start targeting these highs again and say, okay, we've got a bit of a recovery here. All of a sudden, we got a much better risk to reward on our trade. And if we're wrong, well, we're wrong. Quite simply, we break down here and we look for longs again down here. If we start to see weakness, we can then start to short the rips. Yeah, current situation is buy the dips. Other situation is short the rips, all right? But we're a little bit away from that at the moment, all right? The pink is brilliant. Hey, I'm in Brighton. Pinky's going, yeah, damn right. What a wonderful city Brighton is. Always has been. Fantastic night out. And JG, first lady to be signed by Tuchel, the super goalkeeper. Yeah, well, Tuchel's got a hell of a job on his hand for the men's team, that's for sure. And especially with the Lionesses kind of leading the way. But, you know, we'll wait and see. Anyway, we'll get back to charts before I digress too much. So this is where we are on Bitcoin, right? I'm really not that interested on the 4 hour here, I have to say. Intraday, there's much better assets to trade out there. If we look at it on the daily, where do we have our clearest plan, right? Quite simple. Nice consolidation going on here. If the market conditions remain bullish, we should see a breakout of this area here, in which case we want to see this again, as we did here, right? The rules are simple. We look for the breakouts of these key areas and we either long the retests in this case, or we long the areas that it gives us. What are they? Our gaps typically, because we want to see price come up and then want to see price cool off, come back down to an area where we have good risk to reward, where we know buyers can get back in, where we know there's key liquidity, trade it to the upside. All right. So ultimately, more buying opportunities down here or above here. Anything in between at the moment for me is noise. Okay. So let's flick across to the news quickly, right? I know most of you hate this part of the show, but it is very, very important. And hopefully, actually, I've had a few of you reach out and say some really nice things about this. I'll try and keep it short for you because I know we've only got sort of 15 minutes left. But it's, a few people reached out and said, guys, actually really, really helped because I didn't realize we were going into, say, the FOMC statement. I didn't realize that we were going into PPI or CPI. Positions open. It always makes sense to be able to manage those. So we are here, Monday, 28th of July. Nothing today, but let's be aware we are. We do have a lot of high impact news coming up. All right. So we've got Tuesday, we've got JOLTS job openings. All right. We have CB consumer confidence as well, which is slightly downgraded, but still important. Moving through into Wednesday. And now, again, for anybody who's unfamiliar, our focus is on the US market. It's by far the biggest market in the world, still the most influential, and also has the dollar as the world's reserve currency. Okay. Now, Wednesday's a really key day. ADP, non-farm employment change, key figure at the moment. That was massively higher than what they assumed last time. So need to see if that strength is continuing to project into the market. This is key. Advanced GDP quarter on quarter. This is the kind of preliminary look at how GDP is getting on in the US. Obviously they want to see stable growth, ideally growth going up, but they need to plug all of these things into the inflation metrics, which the FOMC, obviously the Fed, which will report via the FOMC, will be very, very interested in. All right. Now let's look what else we've got as well. We've got obviously advanced GDP price index, quarter on quarter, slightly lower grade in terms of, I would say importance, but volatility. Then we've got pending home sales. All right. We're seeing that data start to wash through now, but really importantly, Wednesday, federal funds rate decision and the FOMC statement followed by the FOMC press conference. This is going to be really, really important here. This is all about, what's the Fed going to do here? Is it going to hold? Is it going to cut? Is it going to rise interest rates? If it rises interest rates, risk markets are going to take a massive hit. Bitcoin, crypto is risk market. If they cut, then great. Normally a fuel injection into the risk markets. If they hold, pretty neutral, which the market's kind of got priced in at the moment. And then the statement afterwards comes down to how hawkish or dovish Powell is. That means, hawkish is akin to bearish, dovish akin to bullish. If he comes out and says things like the economy is in much better shape than we thought it would be at this point, we're forecasting more rate cuts before the end of the year. Very unlikely he says that, by the way, but if he does, then risk markets will start to rip. Things like the NASDAQ, the S&P 500, that risk bid will be very much in. However, if he's hawkish and says the data isn't where we want it to be, we're concerned about inflation, we might actually have to not cut for the rest of the year, then the markets could very easily go the other way. So watch that tone, okay? And then we've got news coming all the way through into Thursday as well. Core PCE price index, we've got employment cost index, unemployment claims as well, and finishing off the week with loads of data on Friday. Average hourly earnings, non-farm employment change, unemployment rate, ISM manufacturing PMI, ISM manufacturing prices, and revised UOM consumer sentiment. And I'm really, really glad I made it through all of that without messing up anything, hopefully anyway, or someone I'm sure will tell me on the rerun. But obviously focus really key here is on FOMC and the rate decision. So let's move ourselves back to the chart. We're going to rip through these in the next 10 minutes and hopefully everything else should have been explained at this point. So let's take a look at Ethereum. Actually, I think maybe last week we took a little shift from this, which was my fault, and I think we're focused on ETH here, right? So again, for context, let me just zoom out for you really, really simply. Just this is a key SR level or pivot point for me. We can see what happened when we reclaimed this. Strong move above it, as I was explaining to you before. Good reaction at the gap. Again, just looking at these key areas that I'm mapping out for support and resistance here. Nice close above this level, close above this level here. This was a key, just based, and you'll see it clearer on the daily. But areas we saw key rejections and large sell-offs or acceptances and then pumps. So this, for me, remains, as it has been, the key level here for ETH. Why? Resistance, 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 and we're now kind of knocking into that area. So we were looking previously at price to close above this level and just hold it. Holding of this level, expecting price to move higher. But we do want to be cautious here. We are coming into this key resistance area, but ultimately the liquidity is really resting up here at 4,100 Now, moving this down onto the daily, we can see what we were looking at before, right? This was the key level. We can look at this on the 4 hour, right? But ultimately, look how the granular level and approach to this starts to make sense. We see the weekly close above it, price dips back down. We're now back above. So what we now want to see is price come back down to retest this area, confirm this area of demand or order block, and then price can kind of look to move up from here into these levels. Again, with a little bit of caution, but the fact we've taken price up to this high here, pushing down into here, if we get those low time frame setups, means that we can target this higher. Then we can look to mitigate if we are caught in this kind of deviation or swing failure of this level. We can protect ourselves. If price continues up, then we've got a really good base for which we can pyramid into and build swing positions off of. All right. So looking at this here, it looks quite nice, right? We got the high of this that we might look to retest. So we're going to draw this in. This will be our order block on this level. All right, so this is the daily, so OBD, holding this level here. This is what we want to see, and for price to be pushing up. But, good expansion like we saw on a lot of assets on Sunday, but I don't really trust weekend pumps too much. Apologies for everybody out there that does. So how have we been trading this? Really freaking well, right? Because we've just been sticking to our guns here. Remember, what we're doing when we're trending, we're looking for expansions, consolidations, break out of those consolidations, which we're marking here with the black lines, retests of those consolidations, or retests of the gaps that are left in larger expansive moves higher or lower. In this case, we're looking higher. So longs from here, longs from here, longs from here, longs from within here, break out of this area, looking for longs on the retest here. It didn't work, right? So what happened when we close underneath these, which are the up close candles, right? This area here, we're then looking for price to push down until when? Until we see that dynamic change. And once again, we start closing above the bearish candles or the down close candles, right? We've seen the rejection move down here. We outlined the key level we wanted to see price close above, which was up here. But ultimately, it played out really well. We saw the trend line rejection here, here, and here. We got the breakout. We got the retest. We actually had a lovely CVD divergence down here as well. And ultimately, price has kind of taken off since then. So we don't want to overthink this, right? We just want to be looking for key areas for price to retest to move higher. And on a 4 hour scale, the order block that we've got here on the daily, that we can see this area here is the key one for me. Don't have any gaps, don't have any other order blocks to retest in here. Price could absolutely moon from here, but without an area of consolidation for retest or without a gap, I'm not looking to be an active buyer until we get back down to these areas here. Ultimately, buying low and selling high should always be your preference, all right? And exactly, Craig brings a really good point here as well, which I forgot to mention. Tariff updates as well coming in, right? There was the end of July deadline set. Looks like that's probably going to get extended again. So again, we just basically got a landmine of a week with a lot of different news events rolling in, a lot of people wanting to get on the bid, a lot of people wanting to add Bitcoin, a lot of people wanting to dive into alts, a lot of positivity seeping through into the space. Look at the fear and greed index, look at the altcoin season index, these kind of things getting people really, really up. August is historically not a very good month for risk assets as well, or for Bitcoin. So we just want to make sure we're factoring all of this in. And it doesn't mean don't invest. It doesn't mean don't buy. It just means have a plan for that. It means that if you're willing to add an asset to your long-term portfolio here, and we do get that crash, don't just shed that at a loss. If there was a reason you were investing at these levels, you must have had a longer-term plan for higher prices. All the market's doing is offering you the opportunity to buy it cheaper whilst flushing out weaker hands. If you're wrong and the market completely turns from here, then you either cut your losses lower at a predetermined level, that's why we have risk management, or you hold that project for the long term and ultimately keep averaging into it as price goes lower. That's where good fundamental understanding of the market is key as well. Right, so that's ETH. Really nice, clear plan on ETH. We've got about 5 minutes left, so we're going to take a look at Sol. We are going to try and fit in deep at the end as well for our friend, I believe, Grandmaster Pikachu, who normally asks for that one. I believe he's secretly like a massive whale holder of this one, by the way, Grandmaster. So do let us know. Now, with Solana plan has been lovely and clean and clear. Ultimately, I don't know why that's not on there. Hang on. Might have been off my game a little bit last week and utilizing those. No, we are using the right Sol chart. Okay. Here we go. So the update should be on here, should be from this high. So I don't know why I deleted that. I might have just minimized it last week, but it's fine. That is a key level, exactly as we've looked at on the other charts. What were we hoping to achieve from this? apologies about all the noise down here. But ultimately, we see this weekly order block. Why? Because look what's happening on the way down. Big bullish candle, price closes below it, retest the area, sell off. Bullish candle, price closes below it, price sells off. Bullish candle, price closes below it, here, sells off. Bearish candles, price close above it. Look at the shift in dynamic and delivery here. So we say to ourselves, all right, if the buyers stepped in here, and this is where sellers are trapped, we see the expansion when we revisit these areas, and these are our areas of demand and high probability ones as well, in my opinion, because we've taken liquidity in order to set them. Yeah, so liquidity has been taken from the low. Buyers took that opportunity to set in, sellers are trapped. This allows sellers to mitigate if they've held long-term through this drawdown. Yeah, meaning they can then realign themselves with the trend, which now is looking up. Yeah, low, higher, higher. This looking to be set as the higher low. They can cut their losses here and step back on board with the trend. And then we often see these large expansions. So I'm going to move this. Is going to make more sense in the lower time frame. But on terms of this one, this I'm very interested in. This high here. We did see a large rejection wick here, right? But we did also close above it. We got some form of acceptance. So as long as we hold above 187.68, we could just be seeing some more upside here. And we're going to look at that in a more granular sense here on the lower time frames. Again, I'm not going to go through this in detail and bore you. Same step process, right? We've gone from delivering bearishly. And, you know, we can take our trend line here as well, where we look for the trend line breakout, exactly as we did on previous charts. Ultimately, we're looking for weakness to turn into strength. We see this lovely, sharp V-shaped move. You can look on the previous ones, my terrible analogies about pots of hot and cold water, all right? You want to see these sharp moves, these aggressive rejections. Think of a bouncing ball. If a ball's losing momentum, like here, you see the initial bounce, lesser bounce, and then it falls through the gap or into the storm drain, right? Particularly disturbing for any IT fans out there. Now this one's here, look, price comes into here, big bounce, decent bounce, holds here, and look how it just continues to move up. Ultimately, this is the kind of reaction you want to see at a key level to tell you buyers, in this case, are stepping in. So we can see here, respecting the bearish candles and bullish gaps, bearish candles, bullish gaps. So what have we got here? Well, price has dipped back down into this level. Yeah. We've now got this small down close candle here. I'm not a huge truster of these, and I'll tell you for why, because it's in the realm, it's in the, you know, in the high and low of this much larger move down. We also have this bearish inversion here, right? Meaning that this was a bullish gap, we closed below, but we did recover it very quickly, which, I know this is a bit of a caveat, but in crypto always makes me a little bit suspicious because markets are less liquid. You can see these areas disrespected a little bit more. So again, you want to see those big body closes, not really the long wicks. The quick recovery of this area here and then closing above here has me feeling a lot more bullish than bearish short term. Obviously, we're bullish long term because of the market structure, but this is the key level for me still, 187.68. Want to see this hold, but I'm going to draw this in here as well because this could be a key point of interest should we correct lower. So let's pop that on there. Now, if we want to make some more key plans here on Solana, because this one actually does look really good, as long as the equity markets behave. Again, what are our rules? Bullish market structure here. Yeah, nice expansion candle here as well. So what do I want to see? Well, for bullish continuation, I want to see this bullish gap hold. Okay, expansion's up here. Watch this gap hold. If not, then I want to see this consolidation retested. And that lines up beautifully with our daily order block here as well, right? Our point of demand. So if we close below here, then intraday plays down to there would be acceptable for my system. If not, I'd really be kind of waiting patiently here. But if we get long wicks down and recovery of this gap, this could be forming the base for price to ultimately move higher from here. So we want to keep an eye on that as well. Now, I'm going to take a very quick look at Deep. Can't remember what thing we did it on. I'm sorry, Grandmaster Pikachu. I think it's on this one. Yeah, there's a load of stuff on here anyway, isn't there? So great. Let's just, well, I tell you what, let's just do this, right? Because we clearly haven't updated that one for a while. I think we were using it on a slightly different chart. Price came down, held this really nice bullish gap here. We've seen a nice expansion now. We have this thinner but still equally relevant gap down here, which price is holding. So on a weekly scale, looking for price to just continue to hold these levels and then ultimately push up into this high over here. All right, that high, by the way, is at 0.25509. We don't want to be complacent, though. We do have equal highs here as well, which will be a key level for price to move past, which is this failure swing here. not a swing failure. Swing failure is when you take the high and break back down. In this case, we'll take a low and come back above. This is a failure swing, meaning it failed to take the high and there's less liquidity here and here in the form of equal highs. On a daily scale, how would I be looking at this? Well, on a daily scale, good reaction at this level here. So just want to really kind of see this area hold. We've been given another gap down here, which basically exactly the same as Solana, right? We're going to put in here that that's our daily, is looking to hold. So while we hold this, close below this, I think we flush out these levels here. This is the key area that we want to see hold here on deep. I think a flush of this level and then a recovery here would be really, really key. Let's not forget we got this key area of demand here that's been supporting price, or our order block here on the daily. So again, look at the wicks down into here. This is where we want to see buyers step in again. If not, we're in risk of setting a lower high and coming below this, setting a lower low, meaning we would have a break of market structure, okay? In which case, then I would need to see that market structure recovered. So that's where I am on deep. I wouldn't break that down any further than the 4 hour here. I think that's really good. I want to just see some long wick recoveries here and price holding this. If not, just holding this level here. We certainly don't want to see any closes below here. All right. So just very quickly, because I need to run in a moment, looking at Bitcoin dominance, just a thing of beauty. Call it the Amazonian rainfall. And if any of you have watched programs or have been lucky enough to travel to the Amazon, it's just some of the most beautiful topography in the world. You just get these beautiful cascading waterfalls that just come from these incredibly like mountainous and forest-hilled areas. And it's just the sign that we want to see here. We want to see these big, large drop-offs here. Again, see this one didn't last too long, came back up. Really want to see price heading back down to this 57.71 level first, and then ideally lower. This is where it's going to plug into us having some kind of alt run. I don't really want to call it an alt season anymore, but an alt run. All right, guys. Well, look, thank you so much again for being here with me today. 2,500 of you live with us just right now, just through Twitter. An absolute blessing. So thank you all so much for joining in and listening to me ramble. I'll be back live with you all again on Wednesday for our chart and alt request show. So if you have anything you want me to chart live on the show, please do let me know and I'll make time for it, or as many as I can. Aside from that, keep an eye on the news. Could be a turbulent week ahead, especially for any intraday traders out there. And do stay safe trading out there. And one more note as well, be good to each other, all right? And if you want to know anything more about me, about the Bird Nest, or anything else that we do there, you can find all the information down in the description. Apart from that, wishing you all a fantastic start to the week. Let's go out there. Let's go and get it together. The opportunities are there. Just make sure you're using good risk management and the right psychological approach. Manage your risk, manage your time, manage your capital allocation, and make the most of these conditions while they're still there, all right? Have a fantastic week, everyone, and I look forward to seeing you all